Something's happening. I just restarted my computer because everything moving slow and everything's still moving slow.
And is that something that's going to be material for this company?
Yeah, according to what the company's saying, they are making progress. They're going to launch the next version of the humanoid robot. They're actually stopping the Model S and X production and sales. It's pretty low anyway, and converting that factory to humanoid robots. But we still think it's years away. I think for it to be commercially viable, and interest from the marketplace, it's probably won't be until the end of the decade. But they will use some of that robot within their own factories.
Steve, what about Tesla sinking another $2 billion into Elon Musk's own startup, the XAI? Do people have a way of seeing whether that has a return on that investment? I mean, is it just money that goes in that one direction?
Yeah, there seems to be a lot of confusion in the market, but to me it's actually a right thing to do. Because first of all, Grok, which is part of XAI, it's already in their vehicles, operating in their vehicles as a navigational assistant. And then as robotaxi rolls out, I think they want to personalize those robotaxis, and Grok through XAI is the perfect tool to do that. System to do that. So, if Tesla's going to use the services from XAI, I think they need to pay for it. So $2 billion investment into XAI makes sense.
I see.
Mm-hmm. All right, very good. We got Tesla stock down 2% today, down 6% year to date, and up about 8% over the trailing 12 months. So a lot going on, a lot of cross currents there. The Tesla story, for a lot of folks, it just comes down as a bet on Elon Musk. Steve Mann, thanks so much for joining us. Appreciate it. Steve Mann, Global Autos Analyst at Bloomberg Intelligence. The Fed yesterday, that seems like a year ago.
I know.
And it's just because there's so much news overnight, so much earnings. It's just,
and they didn't do anything.
And they didn't do anything. But, we'll have to see how that plays out. So there's some people that paid attention to it yesterday. I wasn't one of them. Christina Huber, Chief Global Market Strategist at the Man Group, joins us here live in our Bloomberg Interactive Brokers studio. Thank you for braving the cold to come into our studio. Christina, what did you take away from Fed Chairman Jay Powell yesterday? As Scarlett mentioned, it's kind of as expected, but was there anything that jumped out at you?
Well, one thing was that I thought he was way too optimistic when it comes to the labor market.
Okay.
Obviously, the language changed there, and he was looking for a rationale for putting rates on hold and entering a pause phase. My concern is that I don't see signs that this labor market is improving. Yes, we got solid numbers today, but what we've seen is a hiring rate that's gone down significantly. We're at 3.2%. The average over the longer term has been 3.7%. And I would anticipate that we are going to see an increase in layoffs this year, so that what he had called a balance in a lot of different press conferences will now be a mismatch, where we'll have lower hiring, higher layoffs. That is one of my big concerns for the economy in 2026.
And the earnings reports that we've gotten so far, or the company remarks, kind of back that up, right? Amazon being the latest example of 14,000 jobs being cut there. So you were already heading into this FOMC pretty bearish. You had talked a little bit about the possibility of a recession. Do you still think that's a possibility?
Oh, absolutely. I think this is an environment in which we could very well see a modest recession. Yes, productivity gains have been very significant, but we have to keep in mind that the U.S. economy is one that is driven by consumers. And if you have consumers that are already under significant pressure, lower income consumers, middle income consumers, you're relying on higher income consumers, and they may not be able to deliver, especially if you were to see, for example, some kind of a stock market sell-off, as the wealth effect has a big impact on consumer spending for high income consumers.
The consumer confidence number, Paul,
Yep.
earlier this week,
Yep.
showing it's at the lowest since 2014.
Absolutely. How about the potential benefits from the One Big Beautiful Bill in terms of maybe tax relief for some consumers? How does that factor in?
So I know some are hanging their hat on that, but if we were to look at actually where the tax cuts are going, it's to upper middle and higher income households for the most part. That tends to have a lower multiplier effect because among those households, they tend to not spend all of it, save some of it, as opposed to tax cuts or any kind of benefit payments to lower income households where every dollar, almost every dollar, is actually spent. So the multiplier effect is much higher.
I know that you've been more favorable on overseas markets than the U.S. as a result of all the outlook you have for the U.S. economy overall. However, you look at what's happening overseas, Chinese speculative buying driving up metals prices. There's a lot of speculative excess out there in the markets. Where do you go for some confidence that you are getting in at a good valuation as opposed to chasing these highs?
So I think it's two things. First of all, we want to look at the valuations of individual markets. And so if we look at Europe, for example, valuations are relatively low. Asia EM, with the exception of a few markets like India, valuations are relatively low. But for me, it's valuations plus a catalyst. The catalyst in Europe, of course, is defense and defense-related spending. And in Asia, it's drivers like AI CapEx spending. And it's not just coming from the US. Much of it is being driven by Chinese CapEx spending around AI, which is a very different beast, and I would argue has longer legs. But there are also other drivers, electric vehicles, semiconductors that are driving Asia EM. So at the end of the day, it's also about diversification because there's a lot of uncertainty. And so ensuring exposure to a broad range of equity markets, a broad range of asset classes within fixed income, and of course having adequate exposure to alternatives. Those asset classes or sub-asset classes that have historically had low correlations to traditional equities and fixed income. That's how we have to proceed in this kind of environment of very elevated uncertainty.
How does fixed income fit into your outlook here these days?
Well, so I would argue that we need to be cautious and be well aware that central banks are moving in different directions in different parts of the world. There is nothing very coordinated as we see fragmentation on the global stage. So it's about looking at, for example, where the opportunities are in investment grade, and I see that in Europe, as well as a bit in the way of opportunities in high yield, which I see in Europe as well. But again, I think at the end of the day, it's about being well diversified and having that exposure to precious metals as well.
Yeah, you're right.
Really? At these levels?
Absolutely. Absolutely.
How do you express that?
So one could have exposure to mining stocks. One could have exposure to the physical gold, the physical silver through ETFs. There are a variety of ways to do it, but I think it's important because historically that has had has had low correlations. Hasn't had such low correlations recently, but I would argue that's because of the kind of unusual market environment we're in, where two emotions are driving it: fear of missing out and fear.
Yeah.
and things aren't going well if gold prices are going up so much. I think about an old Jerry Seinfeld joke. If you're 35 and you're moving home with your parents, that's a sign that things aren't going well.
Right.
When gold prices are going up as rapidly as they are right now, that's a sign that things aren't going well, and there are certainly real risks in this environment.
Christina Cooper, thank you so much for joining us. Really appreciate it. Christina is a Chief Global Market Strategist for Man Group, joining us live here in our Bloomberg Interactive Brokers studio. A programming note, folks, we will hear from New York City Mayor Zohran Mamdani when he joins Bloomberg Balance of Power today. That'll be at 5 p.m. Wall Street time. You can listen live here on Bloomberg Radio. or watch it on Bloomberg Television and the Bloomberg Podcast channel on YouTube. So we'll have that for you as well. S&P down 75 points, the Dow off 250, NASDAQ off 470. That's about 2% here. Microsoft selling off about 12% today, bringing down NASDAQ. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks slipping with the NASDAQ leading the losses. It's down more than 2%. The S&P 500 down more than 1%. The Dow right now off 0.5%. The two-year yield, 3.54%. That's down 2 basis points. The yield on the 10-year, 4.23%. That's up 9 basis points. Over to commodities, have to point out COMEX gold is down nearly 2%, but at $5,237 an ounce. We have copper up nearly 3%. We have silver down about 6%. Over to Brent crude, it's at $70 a barrel. The currency is the Bloomberg Dollar Spot Index. That's strengthening by about 0.1%. And Bitcoin right now, it's down 5% at just above 84,000. Over to company news. NVIDIA CEO Jensen Huang, well, he is setting the record straight. He's saying that the company has yet to receive H200 chip orders from China. Beijing is considering whether to allow those imports. And sticking with NVIDIA, the information reporting that NVIDIA, Microsoft, Amazon, they may invest up to $60 billion in OpenAI's new funding round. In other news, International Paper, well, it plans to separate into 2 publicly traded companies, one focused on North America and the other on Europe, Middle East, and also Africa operations. Its shares are down about 4%. And finally, Lululemon, they are blaming customers for its see-through leggings fiasco. The company says users, well, they're just wearing the new leggings incorrectly. They say if you sized up and wore seamless skin-toned underwear, it would solve the problem. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, thank you so much, Lisa Mateo, with our Bloomberg Business Flash. All right, tech stocks are really in focus. The Nasdaq Composite Index, Paul, is down 2.25%. The Mag 7 names began reporting yesterday, and it's really a split view here when it comes to those big tech names. And another one is on the docket tonight. You've got Apple reporting this evening at 4:30 p.m. Wall Street time. And of course, we know that the latest Apple iPhone came out, so this is a huge quarter for the company. Anurag Rana is our technology analyst, and he covers all things big tech. Anurag, Apple, there was a lot of good talk, a lot of good feedback on the latest Apple iPhone. I think it's the 17? Are we talking about the 17? Yeah, I think it's the 17. I've lost track of the numbers here. But that is, once again, the driver for Apple, even as a lot of the questions remain on its AI strategy.
Yeah, I think tonight we already have a glimpse that these guys are going to do okay in terms of total revenue growth for the first time for the iPhone. I think it's going to be in double digits, and there is a bit of strength, as you said, on the iPhone 17 family of products. But there's also a trickle-down impact from what they could not fulfill in the prior quarter, and that's going to bleed in. So that's going to be all good. I think the big question right now is whether the rising memory prices are going to
the Working Families Tax Cuts, which encourages private support for scholarships that help students cover a variety of education expenses and enable them to take advantage of the type of educational freedom that South Dakotans have long enjoyed. And I'm glad to see that more than 20 states have already pledged to participate in this important initiative to encourage
Running to YouTube, eh? CNBC charged to watch them live. Bloomberg ain't talking about nothing.
Gets worried about this kind of market reaction, or like you said, they're confident in their strategy overall, they're going to move forward with this regardless of whatever message investors might be trying to send?
No, I don't think they will change their strategy. I mean, they are doing whatever is right for the Microsoft product or families. Because you're
犯相同的罪。
In its September 2024 ruling, the Constitutional Court said that because public sentiment in favor of retribution and deterrence has been adopted by lawmakers as a legislative goal, this has, in effect, underpinned the death penalty's legality.
大法官在
2 years, I don't think that's a problem from a long-term point of view.
How about CapEx?
Tesla shares had initially gone higher, but now they're off by more than 3% after reporting earnings for the fourth quarter. CEO Elon Musk shared that the company will be winding down operations of its Model S and Model X as it moves towards more robotics and autonomous vehicle production.
I think long term we would really the only vehicles that we'll make will be autonomous vehicles, with the exception of the next generation Roadster, which we're hoping to debut in April. Hopefully. It's going to be something out of this world.
Hopefully. My next guest says this is a burning the ships moment for the company, marking a profound shift away from electric vehicles. George Gianarikas, Canaccord Genuity Managing Director, joining us now. George, I love that imagery. It was very Game of Thrones of you, that, you know, he's kind of burning the ships, moving ahead into the brave new future. You know, Musk himself has said for a long time, we are not a car company. That's not why you should own us. That's not what we are. Does this make the moment that it actually isn't a car company?
It was incredibly symbolic for them to end S and X production. I mean, these are the two vehicles that sort of anchored the initial ascent of the company. And they've talked about obviously getting into robots and focusing on autonomy. But the two things that really stood out to us were this stop of production, but also the $20 billion the company plans to spend this year on improving production lines for robots, for autonomous vehicles, for batteries. And not included in that number is the potential for them to build a semiconductor fab. So this is a pretty profound shift in strategy. They may generate negative free cash flow this year, and it is exactly that. It's a burn the ships moment, and they're still making electric vehicles, obviously, but they're super focused on an autonomous future, a robotics future driven by AI, and also with clean energy with batteries and solar power. So it's a profound shift, and people should be ready for a ride downward in profits this year in free cash flow, with the potential to come out on the other side with just a sort of a next generation company, so to speak.
Well, that ride this year, is that why the stock has now turned lower, do you think?
I think so. I mean, look, it was a jarring number. You know, frankly, it was disclosed on the call. It wasn't in a press release, so we had to sort of listen very closely to what they said yesterday and pick up on that. And for people to sort of think about how to model this company, 2, 3, 4, 5 years from now, it takes a lot more, just guesswork. Just because you have to think about, okay, how many robots can they sell in 2029, 2030? How many vehicles will they actually sell? Because if you think about what happens to the overall car park or just overall vehicle sales, if autonomy does really proliferate, overall vehicle sales across the world should actually see pressure, right? Because we don't need as many vehicles to move around. It will just become more efficient. We'll all be able to put our vehicles into this Tesla network, so to speak, and have them move, be used 4 to 5 times more than they have been traditionally. So this is a really profound shift, in not just for Tesla, but for the world if they're successful.
George, I've always said that Tesla is a faith-based stock, right? It's not about like what's really happening. It's what you believe the company is capable of doing. And a lot of the time, those faith-based investors, their faith is rewarded. You're an equity analyst. You gotta, as you said, you gotta model it. You can't just sort of believe. How do you close that gap? And do you think that people's faith is going to be rewarded?
So first of all, we do. I think it's going to be rewarded. And second, I consider myself a little bit of a meat and potatoes analyst. I, like you said, like to look at earnings and multiples for the companies that actually have them. And Tesla has had earnings, and we've always sort of anchored ourselves to an earnings number 2 or 3 years out. And we did our best, to try to understand exactly what the earnings power for the firm is. And granted, there is a high degree of risk here, just because we don't know exactly what the trajectories for autonomy and robotics will be. But we get to around $11 in earnings, non-GAAP earnings in 2028. And you have to assume that they grow vehicle sales, and they sell a lot of cyber cabs, and they continue to sell the Model 3 and Model Y, and they build a robo-taxi business, and they start to build these and sell these robots. And that's what you need to get to that $11 number, which is in our model. And so if you put a pretty healthy multiple on that, you get to our price target. And so that's what people have to believe, that they will be successful in autonomy, that they will actually start selling these robots, that they will start to make them. And one really important point here is that the company is extremely vertically integrated, right? So they've always had this mantra of vertical integration, but they're taking that to, in our opinion, to the next level. I mean, they are mining and refining lithium, for example, and they will start potentially to manufacture their own semiconductors. And this is important specifically because, he sort of alluded to this on yesterday's call, Mr. Musk did, that he sees geopolitical risk being an increasing factor to put into their business planning. So he doesn't want to rely on Taiwan Semi, in our opinion, for example, to get his chip supply. So this is extreme vertical integration, really interesting growth from robotics and autonomy, but you have to your point, take a leap of faith here.
Well, and so as you try to sort of close that gap between faith and reality, do you think the robotaxi plans are achievable at this point on the timeline that he's laid out? And probably more importantly, or more audaciously, perhaps, the Optimus goals?
So in terms of robotaxi, he did lay out a few cities, several cities this year that Tesla plans to embark on and offer their service. They've started in places like Austin and in the Bay Area. So to answer your question, yes, we do believe they'll steadily climb that ladder and proliferate the robotaxi in more markets. And what he said on yesterday's call is that they would be even more ambitious if it wasn't for state and local regulators sort of having to sort of pass muster and make sure that they can get into all these jurisdictions across the country. On Optimus, yes, it does take a leap of faith to believe that the world will start to increasingly deploy humanoid robots in factories and maybe even at home. And Tesla, by the way, is not the only company that believes in that kind of future. There at CES this year, there were a number of U.S. companies and even more Chinese companies that are betting on a future that's dominated by humanoid robotics. Remember, Elon Musk thinks that every person in the world will have one or maybe two humanoid robots before we're all said and done.
I really don't want a robot, George. I don't know. I don't know. I'm long humans. What can I say? George, thank you so much.
I love humans.
I hope everybody will still love humans in the end. I really appreciate it. Thank you, George. That's it for Market Catalyst. I'm Julie Hyman. Thanks for watching. More Yahoo Finance is coming up. Welcome to Morning Brief. I'm Julie Hyman. It is a big week for earnings. It's underway. Let's start off and dive right into it with a check-in on what's going on in the futures this morning. We had Meta, Microsoft, and Tesla after the close yesterday. We have a number of big companies coming out this morning. And as you look at how it's playing out, Dow futures indicating a very slightly higher open. S&P futures looking to come back with the gains here, looking to gain about 0.25%. NASDAQ futures just pointing to a gain of about 0.1%. And even as as we see money go into stocks, we are continuing to see the just blockbuster trading in gold as well. So we wanted to highlight that. Gold pressing higher once again, now above $5,500 an ounce, as we continue to see concern about what's going on around the globe, what central banks are doing, including here with the Federal Reserve, concern about fiscal spending, and amidst all of that, continued buying of gold. But putting that aside for a moment, we got to dive into what's going on with big cap tech, because Meta, Microsoft, and Tesla rolled out even bigger spending than anticipated as they reported earnings. Microsoft, though, is the odd man out in terms of stock reaction. And joining me now, tech editor Dan Howley and senior autos reporter Pras Subramanian. Dan, I want to start with you because we do have one of these things is not like the other sort of situation here this morning. Meta is spending a lot, Microsoft is spending a lot, but investors are reacting a lot more positively to Meta's numbers.
Yeah, especially right after the announcement. I mean, we saw Microsoft drop as much as 7% right away, while Meta kind of started picking up steam. I think, as the earnings call went on, Microsoft's losses kind of paired the losses there. But I think a lot of it had to do with the spending and cloud growth. I think the street was looking for more cloud growth. They slowed slightly quarter over quarter. Year over year, though, they continued to improve. They saw commercial bookings increase 200+%. But, it's the spending here, I think, is the big issue. And, Microsoft is capacity constrained. So, it's either you spend and you don't get to reap the rewards of that spend, or you don't and you perpetually have a backlog. Speaking which backlog for remaining performance obligations crossed the $600 billion mark. So those are basically contracts that Microsoft has signed. They haven't quite delivered on yet, and so they haven't seen the revenue for that, but that's all forward-looking. 45% of that is coming from OpenAI. The remaining 55 comes from the likes of Anthropic as well as other customers. But, they spoke on the phone about how they continue this build-out of their AI data centers, how they're seeing it kind of percolate across their business. And I think, the big kind of takeaway here is that it's kind of what have you done for me lately with Microsoft, where it's, they beat on the top and bottom line, they beat on all the key metrics, but maybe they didn't beat enough for the street.
Yeah, and contrast that with Meta, which is so interesting because Meta is not only a contrast with Microsoft, Meta is a contrast with the last time it reported when it talked about big spending plans and the stock dropped. This time, its spending plans once again blowing away expectations, but the stock is higher.
Yeah, I mean, spending is through the roof. It's bonkers how much this company is going to spend. 100 billion plus in 2026, fiscal 2026, and so they basically said in the prior quarter we're going to see meaningful growth when it comes to spending, and they certainly delivered on that. They spent $72 billion in the last year, and so that's a pretty huge jump, nearly doubling what they had spent in 2025. And yet, the street reacted positively to this. It seemed to be, Meta's been a laggard. Microsoft's been a laggard too. The only one that hasn't been a laggard has been Google, thanks to Gemini 3. But I think part of the message here with Meta was kind of this AI reset that they've been undergoing. They fell short with their Llama 4 behemoth, just delayed, I guess, forever now. We haven't heard much about that yet. It was supposed to come out in April. No sign of that. And, on the call, Zuckerberg was kind of going over how, he's legitimately said, we're in like an AI reset. And so, they hired all of these people. They continued to spend on all of these big names. And, I think that kind of gave a little bit more hope to the street. They talk about how they're going to be integrating large language models, their generative AI, into the algorithms that kind of keep you hooked. So I guess good luck trying to not stay on Instagram for, 2 hours at a time. And they're integrating it in ads, something that they've been doing. But it does seem as though the reaction just kind of flipped from the prior quarter, despite the just coming out with the numbers saying that they're spending as much.
Yeah, really interesting there in terms of how the street is viewing these names. Meanwhile, Pras, I guess Tesla's capex is kind of cute by comparison in terms of its size, but for Tesla, it's big capex.
Yeah, it went from $8 billion in 2024 to, they say, over 20 for 2025. That's like peanuts compared to Meta and Microsoft. But yeah, that's still a lot of money because it's part of their transformation. And I think that's sort of my big takeaway, among a few is Tesla no longer a car company, right? They're spending all this money because they're saying that they're, quote, a transportation services company, right? What does that mean? I mean, they got rid of the Model S now. That vehicle changed the game for EVs, and they're getting rid of the Model X, which was one of their most audacious cars with the falcon wing doors in the back, right? So why they're doing this? Because they want to focus on FSD and robots, okay? And then so looking at FSD, Tesla revealed finally that they have 1.1 million paying FSD subscribers. They're going all in on growth there because they want as many vehicles as possible to have FSD because maybe they might actually join a Tesla robotaxi network. Now, Musk said last night that he said there's around 500 robotaxis circling around Austin and the SF Bay Area. We can't actually independently verify that, but that's what he said. Removing that safety driver, that's sort of with the Austin and the SF Bay robotaxi network. Removing that safety driver is a big deal, and we'll see that ramp up potentially this year, along with the number of new operating regions that they noted last night. The question is, how fast will that come in? Investors want that to happen really fast. And speaking of really fast, Optimus, right? So Optimus, how will that scale? You got rid of the Model X and Model S production lines to build the Optimus lines at the Fremont factory. Tesla looking to reveal the Optimus Gen 3 robot this spring. This is the one that's the production robot, and looking to scale production to before the end of 2026, which I think caught people off guard in a good way. And then they want an eventual capacity of 1 million robots a year.
Yeah, I really thought it was fun. George Gianarikas from RBC called this a burning the ships moment for Tesla. Burning the ships in terms of the X and the S and moving ahead to Optimus. We're going to catch up with George in the 10 o'clock hour. We're going to talk to Rishi Jaluria more about what's going on with Microsoft. Dan Pross, thank you so much. Appreciate it. Well, U.S. stocks are continuing to power higher as tech giants spend big to build out their AI infrastructure. But over the last few months, investors have not been piling into tech like they used to. There's been a rotation out of the sector as investors eye everything from small caps to cyclicals. Joining us now for more on all this is Peter Cheer, Academy Securities Head of Macro Strategy. Good to see you, Peter.
Good to see you too, Jim.
So we have this latest move in stocks coming as a result of tech, powering things to new highs. So how does that fit into the overall picture now?
So, I think what we're really seeing is this, what we've been calling ProSec, or this move to produce for security. So what do we need to produce for production for security and resiliency? So I think energy, electricity, that's a huge part of it. And it fits nicely with the data center and AI, all these conversations about the investment, et cetera. Okay, who is going to power those? Where are we going to get that electricity? And at the same time that you have these massive demands from the data centers and AI for electricity, you've got the average person sitting there wondering what's going on with their electricity bill, right? All of a sudden, literally everyone I talk to, like, why is my electricity bill X more than last year? And you look at it, CPI, the component of electricity, it moved about 4% over 10 years, and it's moved 40% in the last 5 years. So all of a sudden, that's the key. So I think we're going to see massive amounts of electricity generation. I think it's going to be solar. I think it's going to be coal, gas, nuclear, all of those. I do not think wind's going to make it under the Trump agenda. He just hates wind too much, but I do think he is actually going to cave in on solar. So you want to own those. You want to own construction facilities, anything that's going to help this build out. And then the other flip side of it is chips. I think Intel is going to be a big play for this country. We, as a nation, own 10% of it. I think the president's going to do what he can to help Intel. They've got their own technology, and you're going to see the need. It's just so clear. We need to make chips domestically. We cannot rely on Taiwan to produce our chips when they have to ship them right by China. So those are kind of the barbelled investment strategies to me. These rare earths, critical minerals, electricity, and then the chip industry.
And do you want to own that stuff instead of the hyperscalers and, some of the companies that are going to be, building the LLMs or putting them into companies?
For me, yes. And so one, Intel's been doing phenomenally well, right? I think it was up 80% last year, it was up 40% this year, settled off a bit after earnings. But they are going to make chips for this country, right? People are going to be forced or need to use their chips. And the electricity, you sit there and you look at these hyperscalers. One, they all trade at fairly high valuations. You see one down 8%, the other up 10%, so there's volatility. And to me, it's very unclear, right? It was all ChatGPT 2 years ago. ChatGPT, when I talk to people, is kind of, I don't know if it's anyone's top-ranked LLM right now. So who knows how this is all going to play out. So at this point, given valuations, I'd rather bet a little bit on the infrastructure than who's going to win.
And historically, Peter, you're a macro guy. So to take a step back for a moment, we're coming off of a Fed meeting where they didn't change rates, where really politics seem to take more center stage than what's going on in the economy. So what does that backdrop look like? I mean, we don't seem to be out of the woods, at least according to the Fed, yet in terms of either inflation or the job market.
So one, I think the Fed is still a little bit hypersensitive to the fact that they missed and were all on team transitory. And again, if you were a corporation, someone would have got fired, lost their job. They're all still there. So I think that kind of weighs on them. When I look at it, I think the job situation is still a little bit murky. I don't like the job situation. I like looking at the JOLTS quit rate. To me, that's kind of a crowdsourced data. People quit if they think they can get another job. So I see weakness there. I think the Fed is overly concerned about inflation. When I look at something like a Truflation, which seems to try and measure inflation a bit more real time, it's way lower. It's saying it's 1.5%. Now, it doesn't capture everything. The flip side of that is real estate. We still use, I think, it's owner's equivalent rent. And I can tell you, I think every year or two, I go through the BLS and try and figure out how to calculate owner's equivalent rent. I scratch my head. And yeah, maybe 50 years ago, people actually rented single-family homes. That's not how it works now. People rent apartments. You have Zillow rent. You have Cleveland has a Fed has a real-time rent. It's all come down. So we're still sitting there reacting to this overstating cost and shelter in CPI. I think the inflation story is fine. I think we can be sub 2.25%. That should let us cut. I think there's a decent chance Powell cuts once more before he's done. So he's got 2 meetings to do it.
I think you're an outlier on that there, Peter.
I am an outlier. And I guess my view is the data's kind of pushing that way. He actually did kind of point out that he might cut even if GDP growth was strong, if he's worried about jobs. I'm worried about jobs.
Right. He seemed to indicate, yes, I thought that was a really interesting answer to a question about GDP versus jobs, sort of showing different things. And he seemed to indicate it's the jobs data that tends to be more of a real signal, typically.
Yep. And so I thought that was really important. Yeah. And the other thing is, I feel like, okay, so this month he stood up to the president and said, we're not going to cut, and we coalesced around no cuts. But I feel like, okay, you've won. He's got the moral high ground now. If the data shows, I think he's not going to be afraid to cut at one of the next 2 meetings. And no matter what happens, I think whoever comes in, whether it's Rick Reeder or someone else, we are going to be down 75 bips by September. We want this economy, the administration wants the economy running hot by that time. And I think there's also going to be a big fixation on 10-year yields. I think they're going to use the balance sheet in creative ways to keep longer dated yields lower. You just look at one of their stated goals. Besant talks about it all the time, and I listen to Besant probably more than anyone. They want mortgage rates lower. Well, you can do that by buying mortgages. That helps mortgage spreads, which is part of the equation. But mortgages price off the 10-year treasury. So if you get 10-year treasuries lower, that helps. So look for creative ways to get yields down. They can do things like Operation Twist, where they sell some of their shorter dated T-bills they own to buy longer dated bonds to help that. They can work in conjunction with the treasury. And that's the other thing. I think, everyone's been so fixated on, the Fed independence. I think we're missing that you can have a lot of cooperation between the admin, the Treasury, and the Fed, and it's still independent, but cooperation is a good thing. We've seen it in times of stress. We saw it during COVID.
Right, but but the two times you mentioned are times of emergency.
Yes, but
and for all 3 of them to coordinate, they have to be on the same page about that level of stimulus being necessary.
And I think you will see that as the new Fed chair takes over. Again, some of these things, it's so wonky. We all treat like this neutral rate as though it's some exact science. And I think even Yellen was once quoted saying it could be anywhere from 1% to 5%.
Right.
So there's a wide range. I think Moran's done a good job kind of attacking, saying the neutral rate's lower than we believe. So to me, 75 bips. Again, I don't think we're going to get anything like President Trump wants. We're not going to be 1% Fed funds. But we can get to 2.875%, which would be 75 bips from here. I think pretty easily and justifiable.
What do you think about this idea that tariff inflation is still making its way through?
Yeah, I think it's slowly bleeding its way through. And again, I think that's kind of a steady state because, one, some of the exporters did cut their prices to give people a break. Well, they're going to slowly raise those prices. The tariffs keep coming. So I think you're seeing that. And when I look at everything I'm talking about, building out the electricity, building out the data centers, there's going to be construction costs going through this. There's going to be pressure. I'm getting a little bit concerned about commodity prices. I mean, they are skyrocketing. It went from gold and silver to now, if you dig it out of the ground, it's all of a sudden become very expensive. So that's my one fear that I didn't quite see until 2 weeks ago. I'm long a lot of these. I love uranium. I think uranium's going to do very well. I just don't see how we get to a 20, 30-year, 40-year energy plan without doing some sort of nuclear. So that's been kind of my big take in there. And again, I like companies like AES, some of the more solar-based companies that have been left behind, because I do think the President of Trump. And so when I look at uranium, that's a very high beta play and very risky. When I look at something like an AES or some of the utilities, much less beta,
Right.
a little bit of a dividend, so you can play both of those.
All right, Peter, thanks so much.
Thanks very much for having me.
Coming up on Morning Brief, Southwest Airlines reporting a strong forecast for 2026. We'll talk to CFO Tom Doxey next.
Dig out there.
You mean he shows up in the office?
He shows up at the office every day, and he brings his A game, which we appreciate. Boy, it's rough out there in the marketplace here. No place to hide here. The S&P down 1.1%. The Dow down 0.4%.
Well, Meta, you can hide in Meta.
Yeah, you can hide in Meta. That's right. And the Nasdaq off a little over 2% here. So some real sell-off there. The VIX spikes up 2 big points. We're now just below 19 on the Tom Keene VIX. All right, folks, and we will hear from New York City Mayor Zoran Mondani when he joins Bloomberg Balance of Power today. That's at 5 p.m. Wall Street time. You can listen here on Bloomberg Radio, Bloomberg Television, and Bloomberg Podcast Channel. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and to learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Well, we got some cautious trading on Wall Street, concerns over whether that surge in AI spend is going to translate into earnings. We look at the NASDAQ right now. It's down nearly 2%, 470 points. The S&P 500 falling 1%, 71 points, and the Dow off about 0.3%, 150 points. The two-year yield, 3.55%. That's down 1 basis point. The yield on the 10-year, 4.24%, and that is little change. Over to commodities right now. COMEX gold taking a hit, down 1%, still at $5,283 an ounce. We go to silver, down nearly 4%. Copper up more than 3%. Brent crude, $70 a barrel. That's after President Trump renewed those threats against Iran. We go to the Bloomberg Dollar Spot Index. That's strengthening by about 0.1%. And Bitcoin right now down 5% at just above 84,000. Dow shares are down about 4%. That's after saying it would terminate about 4,500 roles. It's looking to simplify, also streamline their operations. SAP shares, they fell the most in more than 5 years. It's down 16% in Germany. Growth in that current cloud backlog, well, it missed expectations. And Samsung, their chip unit, they beat expectations, a more than 5-fold profit gain in the December quarter. Shares, though, down nearly 2% in South Korea. And Deutsche Bank, they closed out a record year for profit with higher trading income, also announced a new share buyback. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
Thank you so much, Lisa Mateo. A lot of earnings to get through, and you heard the big names there. And of course, now that we are through some of the Mag 7 names, these hyperscalers that have talked about how much they're spending to build out their AI infrastructure, it's now time for them to tap the debt markets to be able to come up with the money for that. So let's bring in Winnie Cesar. She is Global Head of Strategy at Credit Insights to talk about the credit market. And we know that February and March are typically some of the busiest months for the TMT, the technology, media, and telecom sector. And especially so this time around with so many of these companies getting ready to spend on their AI ambitions. Winnie, we see credit spreads very tight. So I suppose if you're an issuer, now's a great time to sell debt. But won't this flood of issuance at some point loosen up those credit spreads?
Hi there. Yes, thank you. Good morning. Indeed, the flood of issuance or expected flood of issuance has already started to reprice some of the key sectors within the corporate credit markets. Historically, technology has been one of the more defensive, tighter trading sectors. This makes a lot of sense just given the tremendous free cash flow associated with some of these very highly rated names. However, a lot of that free cash flow is now being diverted to all of that AI infrastructure and investment spend. And with that, we've actually seen US IG tech spreads back up a good bit. They're trading basically in line with the broader IG index, which really indicates that investors are anticipating to see at least some degree of fundamental recalibration within the tech sector related to all of this spending. So while spreads are still very tightly wound, we're already starting to see the impact of the expected deluge of new issue supply.
And you expect the credit markets, to be receptive, really, really receptive, exceptionally receptive? How do you think the market's going to react to if you start seeing, big $10, $20 billion deals come down the pipe?
Yeah, I think that this is the question everybody is trying to grapple with, whether the backup in spreads is in anticipation of these new deals that need to come to the market. And once they clear the market, perhaps things will then reprice tighter because a lot of that headwind will kind of be behind us. We are taking kind of the other side. We think that the AI CapEx trend is a more medium-term play and that we need to still be a little bit careful, especially within the technology sector, for some of these big issuers that do not necessarily have the clearest and most direct path to monetization in the relatively near term. And with that, there are some open questions around the trajectory of ratings and the trajectory of credit markets. So while demand for primary deals has been quite strong, there have been some sectors and some specific deals where investors are definitely requiring a little bit more compensation to play in those deals.
And what's the unifying theme? I mean, does it just come down to how the management presents their specific plans? Are there already some fundamentals in place that kind of make investors a little more wary than for other companies?
Yeah, I think some of the unifying themes are, what is the track record of a specific company? There are some companies within the broader corporate credit landscape where management has been a little bit more willing to push on their balance sheets to increase debt loads in order to fund M&A or these big CapEx projects. And those companies are the ones where investors are definitely demonstrating the most kind of scrutiny and being a little bit more critical. You've seen spreads widen out a good bit. Whereas there are other types of companies and sectors where there's either a clear kind of path to monetization. I think the utility sector is really interesting as it's very involved in the CapEx build out for AI and data centers, but there is a little bit more of a direct kind of contract in place for a lot of the investments that they're going to be doing. And so I think that clients and investors are really thinking about, what's the track record here and how clear are these cash flows? How quickly can I really identify the potential return on investment?
Winnie, what did you hear from the Fed chair yesterday, and how do you think it impacts kind of maybe market outlook?
Yeah, I think that it was a pretty balanced message. Of course, the press conference was a lot of deflection of the more political topics, which was a little bit of a distraction as it relates to the path of Fed policy. I think that the wait and see approach that the Fed seems to be taking in the near term probably makes a lot of sense, especially given the recent kind of uptick in some of the inflationary forces. We're especially watching crude oil prices, which has the most direct impact into kind of consumer and a wide range of corporate input prices. And in general, we were a little surprised to see that they had gotten, I would say, more constructive on the labor market in the Fed policy statement. But I think Fed Chair Powell did try to kind of balance, where we've been with labor, where we might expect to go with labor. And, we're not necessarily waving the all clear flag, but for right now, just content to wait and see.
All right, Winnie, thank you so much. Appreciate that. Winnie Caesar, Global Head of Strategy at Credit Insights, joining us via Zoom here. I tell you, we were talking about where you can find a winner in this market today. Mm-hmm. Royal Caribbean Cruises. Stock's up 15% today.
RCL, right?
Yep, RCL. They put up some good numbers. They're building more ships.
Up 15%.
I tipped the scales here. When I booked the first cruise ship for myself, that was the signal to buy. You got to jump in and buy.
Wait, what company are you going with?
Viking. The river cruise over in Europe. Yep, exactly. Thank you. Jody Laurie joins us, Bloomberg Intelligence credit analyst. She follows all the consumer companies, including the cruise lines here. What did you learn today from the Royal Caribbean, Jody, about their business?
I think the most striking thing for me was that it confirms a lot of the data that we've seen, which is that cruisers are continuing to cruise and continue to cruise in 2026, despite all the geopolitical headlines that are maybe perhaps causing hesitancy. I think it's not necessarily affecting cruise lines at the moment.
Okay, so in terms of the outlook for the cruise lines, it's been dependent on steady consumer demand. Folks like Paul putting in their deposits for months out, and that has been very, very steady. Are you starting to see any kind of wobbliness in that? Because we did hear that consumer confidence is now at the lowest since 2014, and I know that's an aggregate reading, but at some point it does start to affect those with higher incomes who are a little bit more freewheeling in their spending.
Right. So I think the key here is that the cruising ecosystem isn't necessarily seeing the wobbliness. We might be seeing it a little bit for some of the names, but for Royal Caribbean, they were pretty positive and optimistic. I think what sort of struck me as most interesting is they made sure to point out that onboard spending hasn't deteriorated and continues to be strong in addition to bookings. So what we've been watching more than anything is signs that people are cruising, but maybe they're not spending as much while on the ship and spending as much on excursions. And I think our survey data speaks to that point, that if people do feel the strain, that's one area where they'll cut back. And Royal Caribbean's customer base at least is not seeing that. And what's so fascinating is that's leading to them expecting a 13% rise in EBITDA going into 2026.
And they also announced plans to, build 2 more ships with an option on 4. How do they finance that stuff usually because these ships aren't cheap?
They are not cheap. So what's interesting is we've seen a few of the cruises, including Royal and Viking, choose to use the capital markets to finance the traditional, unsecured issuance. But primarily what they do is they have export credit facilities, which are sort of similar to a mortgage, but you get a little bit of a lag time before you have to start paying after you accept the ship. So you put down 20%, 80% of it is financed, and that's through a structure that pays out over time. It gives the companies the ability to book out on the ship, to generate cash flow on the ship, and then creates this nice sort of spin wheel for them. That's mostly what they do is export credit facilities, but we have seen recently that the capital markets were attractive enough that they chose instead to issue there, and it gives them a little bit more flexibility. It's not as much of an implied secured. Even if it's not actually secured, it is tied to certain ships.
How long is the useful life of a ship? I mean, they're ordering these new ships. How long is it good for before they then have to turn it over?
So usually the ships last about 20, sometimes 30 years. It depends on how often they actually refurbish it, update it. We're now seeing Carnival actually took us on one of their AIDA ships that recently what they've been doing is they've been refitting it such that they're not spending as much capex as you would on a brand new ship. You're not talking that $1 billion ship. You're spending, something in the, $50 million investment range, but creating a whole new look of a ship. Identifying areas of the ship that might be better suited to do something else, and revamping it, and that can extend the life of the ship, particularly if you're replacing engines and focusing on the underlyings of the ship. So I think we'll start to see the companies try to see if they can stretch out these ships longer. But there is a component of people like going on the shiny new objects.
That's
I
right.
mean, Icon has been such a boom for Royal Caribbean in particular. We were on it, and it's fascinating to be on it just because of the allure of being on one of the biggest ships in the water. But I mean, really, in reality, just the amount of demand and the amount of buzz it created, even if it's not necessarily the best ship out there in the water.
Yeah, sitting on the beach in Aruba, you see the ships coming in and out all day.
And they seem to move really slow, right? Because they're so massive.
Yeah, and then the Icon thing comes along, and you're just like, holy cow, it is just incredible. But again, I can tell you, every day, 2 or 3 ships came into port, 2 or 3 ships went out, and that's how they roll. So, and all I thought was just cash flow. That's his cash flow right there. So.
And you're contributing to it.
Oh well, yeah, you're darn right. They got some of my money up front, so it's a nice model. Now that I think about it, Jody Laurie, senior credit analyst for Bloomberg Intelligence. Thanks so much. We appreciate it. Hey, a programming note, folks. California Governor Gavin Newsom joins Bloomberg Business Week editor Brad Stone for a fireside chat in the latest edition of Bloomberg Newsmakers. Tune in at 2:15 p.m. Wall Street time on Bloomberg Radio, Bloomberg Television, and the Bloomberg Podcast channel on YouTube. So California Governor Gavin Newsom with Brad Stone.
And we have some breaking news. The First Brand's founder, Patrick James, has been indicted by U.S. prosecutors. We'll keep you posted on further developments on that story. This is Bloomberg.
This is breaking news from Bloomberg.
All right, Scarlet Food Pulse winning live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We're going to get some breaking news right now. President Trump is speaking at the White House, holding a cabinet meeting. Let's go to it right now.
Tremendous progress has been made. I want to thank my entire cabinet for 12 months of unprecedented achievements. We really have. I mean, it's unprecedented. The numbers we've had on the economy and growth, you see them, and that's despite a Democrat shutdown. Without the shutdown, we would have picked up about 1.5 points more than already high numbers, record-setting numbers. So this has been, I think, and a lot of people say it, the most successful year of any administration in American history. First year, there's never been a first year like this, including the fact that we put out, extinguished 8 wars, and another one we think is coming. Steve Witkoff's working very hard, and Jared and everybody else, and I think it's coming. It was just announced that the murder rate in our country is the biggest drop ever recorded. It's at the lowest level in 125 years. First in recorded history, it's the lowest in at least 125 years. It's a wonderful thing. And that crime is way down, and one of the reasons was we've taken a lot of bad people and gotten them out of our country. In some cases, they're so bad that we put them in prison because we don't want them to even take a chance of coming back in, even though our border is very secure, record-setting secure. We had 0 illegal aliens being admitted into our country for the last 8 months. That's hard for even me to believe, but the people that make up the lists are supposedly nonpartisan, but I would say they lean toward the Democrat side. And if they say that, I'm all for it. As you know, we've had a situation take place with respect to Venezuela. I want to just thank General Kane and his staff. Well, the job that they've done is incredible. Nobody's ever seen anything like it. And once it did take place, I want to thank the leadership of Venezuela. We're getting along really well with them. The relationships have been very strong, very good. And they have informed me that they feel there's very good security, very strong security. We're working with the various people involved, including Chris and Doug and everybody on the oil. We have the major oil companies going to Venezuela now, scouting it out and picking their locations, and they'll be bringing back tremendous wealth for Venezuela and for the United States, and the oil companies will do fine too. Venezuela will actually make for themselves more money than they've ever made before, and that's a good thing. And the people of Venezuela were literally in the streets waving American flags. They were so happy. And the people in our country, like in the Doral section of Miami, which is considered little Venezuela, they're thrilled. And I just spoke to the president of Venezuela, informed her that we're going to be opening up all commercial airspace over Venezuela. American citizens will be very shortly able to go to Venezuela, and they'll be safe there. They'll be safe. It's under very strong control. And the people of formerly of Venezuela, some want to go back and some want to go back to visit, and they're going to be able to do that. So I've instructed Sean Duffy and everybody else concerned, including the military, that if you would, by the end of today, I'd like you to have the airspace over Venezuela. Planes can go to Venezuela opened up. Okay?
Yes.
Thank you very much. And I want to thank all of the people in Venezuela for what they went through, and I want to thank the leadership for really they're doing a good job. And just as I promised, we've defeated the Biden inflation nightmare and achieved explosive new economic growth. The astounding 5.4%, and the fact that we're 10%, which is a number nobody's ever heard of. And we've been given great national security because of tariffs, and we've also been given unprecedented income because of tariffs. Part of the income that we gave, $12 billion, we gave to the farmers of our country. So that yesterday I was up in Iowa, and they were very happy, Madam Secretary.
Yes, sir.
They were very, very happy. They were great. So the GDP growth in the fourth quarter was great. And it's going to be, I think we're going to have an amazing and incredible year. Hopefully we won't have a shutdown. We're working on that right now. I think we're getting close. The Democrats, I don't believe, want to see it either. So we'll work in a very bipartisan way. I believe not to have a shutdown. We don't want a shutdown. And just yesterday, the S&P 500 hit 7,000 for the first time ever. There's never been any time at which it's done like that. And the other stocks also, I think it was 52 times for the Dow, had hit a record high. But the 7,000 was not a number that was even thinkable if you go back a year ago. So S&P hit 7,000 for the first time ever. The stock market has set, it's actually 53 all-time record highs since the election, adding $9 trillion in value to savings, retirement accounts, and 401ks. And I mean, everybody benefits, but we have record stock markets. Companies have never done well. And most importantly, if you think about it, after 4 years in which Biden got much less than $1 trillion of investment into our country, actually it was taken over 11 months, even though we're 12 months. In 11 months, we've taken in more than $18 trillion. So they did less than $1 trillion, Scott, in a period of 4 years, and we've done $18 trillion in less than 1 year. So there's never been anything like that. No other country has done those numbers, by the way, in history. 10 years ago, one country did $3 trillion. No other, we did $18 trillion is being invested now. Thousands of businesses, plants, equipment all over the country are being built right now. And they're going to be opening pretty soon, and when they open, you'll see numbers like nobody's ever seen before. The economy is doing amazingly well. I wish the press would report it, but people are finding out. They're seeing it. It's coming. It's becoming pretty evident. It's hard to hide. Biden inflation, which is really stagflation, cost the typical family $34,000. Think of that, $34,000. But after 1 year, inflation by more than 4%. Think of this, over $4 a gallon. Depending on where you are. In California, it's $7, $8 a gallon. I was in Iowa, and they had $1.85 because I had it at $1.99 a gallon. And I was corrected by two farmers that said, I just bought my gasoline for $1.85. So, Chris, you have to be doing something right, you and Doug, right? But I don't want to give you too much confidence. You got to keep it going. We're drilling, I think I can say we're drilling more than at any time ever in the history. We're taking out more energy out of our land, but specifically, if you look at gas, we've never been anywhere even close. Is that a correct statement?
That's correct. All-time records.
Yeah, great. It's a great job. Well, it's supply and demand. So that's going down rapidly. And, you know, when energy goes down, everything else goes down. They tried to do their thing. It was a disaster. Then they ran back very late to the Trump policy, but they didn't do the Trump policy. They cut leases. They did everything that they could do, but they lost it. And they were very high, and we're now less than $2 in many areas, $2.30 a gallon average. Grocery prices, airfares, hotels, car payments, and rent prices are coming down very fast. And you don't hear the word affordability issued by the Democrats anymore. Now they're going into other things because they're getting beaten badly on affordability. Remember that when I was elected, I came into office, I inherited a total mess, starting with eggs, which were 4 times higher than they were just a year before. And Brooke got them down very quickly before Easter. They said they wanted me to buy plastic eggs for the egg hunt, at the very famous egg hunt at the White House. Sir, would you buy plastic eggs? And we buy a lot of, like 100,000 eggs. And I said, we're not going to buy plastic eggs. And by the time we had the egg hunt, a few months later, we had the prices down pretty good. And now they're really low. Now they're at a very low level. So we really have, you don't hear the word affordability because we inherited very high prices, and we inherited the highest inflation in 48 years. I say the history of our country. I think it sounds almost the same. Actually, I think 48 years sounds actually worse for some reason. So I'll go with the 40 because the press corrected me. I said history, and they said, it's not a history, it's 48 years. I said, I'll accept that. And we had the highest inflation in 48 years. We have now as you saw yesterday with the Fed, I'm not a fan of his, he said that inflation essentially is not a factor. It's really been pretty amazing. I just put out a statement about his statements. I won't repeat them here because they're too angry. And thanks to our tax cuts, millions of Americans will soon receive record-setting tax refunds. You're going to get a lot of tax refunds, with the average refund expected to be over $1,000 higher than it has been at any time. So we're going to be getting some pretty good refunds, a lot of people. If congressional Democrats had their way, Americans would right now be facing the largest tax hike ever. You know, their proposal was to raise taxes very substantially. And our proposal, which is in the great, big, beautiful New Deal, it's a New Deal in its own way. It's a Republican version of the New Deal. Right behind you is a nice picture of FDR. This is a much better deal than the FDR deal. But we have the great, big, beautiful bill, and it's given tremendous tax cuts and a lot of other things. People are now finding out how good it is, and it's just kicked in as of January 1st, by the way. So we're really starting to see it. Even though it's a month, we're really starting to see it. The U.S. economy would be cratering if they had won this election. Our country would be in very bad shape. Would be maybe not much of a country anymore. I don't think it would be a country anymore. They were doing everything wrong, but they were going to give you the largest tax hike in history, and we're giving you the largest tax cut in history in the great, big, beautiful bill. In addition, I think it's very good. I think it's very important. You have no tax on overtime, no tax on tips, and no tax on Social Security, but you also have, you're getting this is the first time this ever happened. If you buy a car, you go out and borrow money, you get an interest deduction. You take the interest rate, the interest that you're paying on the loan, you're able to deduct it for income tax purposes. So that's a first ever, and I think it's going to be great for everybody, including the car companies. I was in Detroit 3 weeks ago. I went to the Ford factory, spoke to the General Motors people. It's all the same. They're doing better than they've ever done. The factory I went to was like a World War I, earlier than World War I factory, opened up. One of the oldest buildings, but one of the biggest. And Ford was getting ready to close it a couple of years ago, and then they saw that I was doing well, and it looked like I would have a good chance of winning. And they kept it going, barely going. And last week they announced, during my visit, they announced that they're going to round the clock production. They never thought it was. I said, did you ever think? I spoke with Bill Ford and the president of Ford. They were both there, and they said, we can't even believe it. We were going to close this building 2 years ago, and now it's going round the clock. He said, we cannot. I mean, they said, we wish it was twice the size, but they're now building additional plants in the United States, as is everybody else. You have AI building, but the car companies, I love the car companies, and you have them, they're all coming back. They're coming back from Mexico, they're coming back from Canada, they're coming back from Japan, and they're coming back from Germany, all over Europe. They're coming back, they're building here because they want to avoid the tariffs. They don't want to pay the 15%, in some cases 25% tariff. Could be a lot higher than that if it wasn't working. So because of that, they're all coming back. One statistic yesterday that Scott told me is that for the first time ever, tell them about the steel in Japan, that we are now making more steel. Go ahead, please.
So yesterday they reported for the first time in 26 years, the United States of America produced more space tariffs.
Amazing. He obviously said that much better than I did, because I got no applause that I'm giving you a home run after home run. He says one thing and everybody. I should have saved that one for myself. No, but think of it. First time, and they read almost 30 years, but I guess it's 26, 27 years, that we are now producing more steel than Japan. Japan being a big steel producer. Japan and other countries really took our steel production away from us. Now, if you think of this, three, 4 years ago, the steel companies were all closing up. We worked a fantastic deal with U.S. Steel. We saved U.S. Steel. And now it's all coming about. But and that's just the beginning. There are a lot of steel plants right now being built. So that's an amazing number. Nobody would have believed that. If you would have said that 3, 4, 5 years ago, people would have said, yeah, it's not a true fact. But so it has to be true, because otherwise you question me on everything. I have to be extremely accurate. I don't exaggerate it. I don't want to exaggerate, because you will call me. You don't call other people, but you would call me under my most favored nation spot, which I think is the most important thing, Bobby, of all what we've done, because we're bringing drug prices down by 80, 90%, depending on the way. You could say 5, 6, 7, 800%. Depends on the way you want to calculate it, right? But let's go the old-fashioned way. But drug prices for prescription drugs will be down 80, 90%, 75%, 68%. They've only gone up for years and years and years. They've only gone up, and now we're going to have essentially the most favored nation. We're going to have the most favored price in the whole world. Whatever the lowest price in the world is, that's what we're going to pay. And I don't want to go into a big deal, but nobody else could have gotten this but this administration. I'm being very nice when I say that. The cost of prescription drugs is coming down by a number that was never even thought of. This will have a huge impact on healthcare, by the way, because obviously drugs are a big part of healthcare, and it will help repair some of the Unaffordable Care Act's damage that they've done, because the Unaffordable Care Act, which is Obamacare, it's unaffordable. It's not affordable, and it's a disaster. And hopefully we will be paying money directly to the people instead of giving the insurance companies the money. They'll go into a healthcare savings account or whatever it is. But think of it, we pay the money, billions and billions, really trillions of dollars going to insurance companies. We want that money to go to the people. They buy their own health care. And it's so popular. The problem we have is the Democrats are owned by the insurance companies. They're literally owned lock, stock, and barrel by the insurance companies, and they hate it. But the people love it, including all Democrats. So I think we'll perhaps be successful with it. But it was an idea I had. I read the papers, and I'm reading one of the stories about the insurance companies, how much money they're making, where they received billions and billions of dollars for this stuff from the United States of America, and their stock has gone up by 1,400%. Think of it, 1,400. One went up 1,700%. Numbers went up. If you go up 1,000%, you're doing bad in that business, right? And it's all because of the money. Not all, but mostly because of the money the United States pays the insurance companies. They say, this is big stuff. And I asked somebody, why don't we just pay the people directly? And they said, that's a good idea. It's funny, it's a very complicated business, but actually it's not so complicated. And I went to Bobby and I went to Dr. Oz. I said, can I talk to you guys about this? Is this the kind of money the insurance companies get? Yes. Why don't we pay the people directly? And the primary answer was that the Democrats will never go along with it. But the people go along with it, because I put it out, it went viral. It went viral. Susie, I went all over the place. It became the biggest story. I just said it. And so I think we have a great situation if we can do it. But if you think most favored nation policy for drugs will bring your drug prices down at levels. So now if they're selling a pill for $10 in London and $130 in New York, the London price will go up to $20 and we'll go down to $20. So we'll go from 130 down to 20. And by the way, tariffs did it again, because the drug company said, we'll do it begrudgingly, but they were okay. But we'll do it, but no nation's going to approve it, because even if you raise the price by, like on a pill, $10 to $20, you're doubling the price of their prescription drugs. I said, no, they'll do it. And when I got them on the phone, I said, if you don't do it, we're going to charge you very substantial tariffs, more money than that's going to cost you. And they said, we'll do it. And before, I don't know that any other president even tried to do it. We can't find it. But if they did try, they wouldn't have gotten through the companies. They wouldn't have gotten through the company, and then they wouldn't have gotten through the country. I spoke with Macron. He was the first one. He was not at that time wearing sunglasses. And he said, no, Donald, I will not do this. I will not. I won't even consider, you're asking me to double the price. I said, you have no choice. You have to do it because you guys have been ripping us off. In other words, the whole world, we've been subsidizing the whole world on drug costs. That's why they were $10 and we'd be at 130. As an example, there were many examples. I could give you examples even worse. He said, no, I will not do that. And I said, yes, you will. 100% you'll do it. He said, no, I won't do that, Donald. You're asking me to double the cost of our prescription. We will not do that. I mean, look, you've been ripping us off now for decades. We're not going to do it anymore. You can do it under Biden and Obama and other people. You're not going to do it under us. We won't do it. I said, well, if you don't do it, I'm going to charge you a 25% tariff on all of your wine, champagne, and everything else you sell into the United States. He said, like I said, I will do it. And that was the end of the conversation, right? That was the end of the conversation. So now we have favored nations that everybody said would be impossible to get. And I then had the same conversation with 15 other countries. Every one of them agreed after a short conference. They all said no. And then within a matter of seconds, they said, we would be very happy to do that. Thank you for asking in such a nice way. And it's a great achievement. I think it's going to be one of the best achievements we've had in this country in a long time. So we're going to be knocking drug prices down at levels never seen before. I want to thank the drug companies because once they agreed, they really did. They felt it was very unfair. One of them told me it's actually a relief to agree because this has been just a rough thing for me, to justify it. Because they couldn't justify it. I said, how come in London I can buy something for $10 and in New York I have to pay $130? And they go, well, it's research and development. I said, yeah, but you have research and development from them. Made in the same factory, made in everything. This is where my friend, who's very successful, I told you, a seriously overweight person, he takes the fat pill or the fat shot. And he was in London and he said, cost $87 there, cost $1,300 in New York. What's going on? He called me up. And, I knew that, but he put it in a very blunt way. I've known him a long time. He's a crude individual, but smart as hell, made a lot of money. But he just thought it was sort of ridiculous. He happened to be in London, and he got the shot, Ozempic, I think, or one of them. And I told him it wasn't working. For him, it didn't work. And he brought up a good point. It didn't work. I told him, man, he knows who I'm talking about. He's going crazy. He begs me not to mention.
He's not talking about me, ladies.
No, it's not our great vice president. No, but he begs me not to mention his name because he's become very famous without mentioning his name. And he is actually a very well-known business person. But he did make a point. But I knew the point very well. We were always paying far more than any other nation. We were subsidizing the world. Right now, there's no more of that. So we're going to be bringing the drug prices down at numbers never seen before. It's going to have a huge impact, positive impact on healthcare. So with that, we are going to ask a couple of people to say a few words. And we're not going to go through the whole table because the last time we had a press conference, it lasted for 3 hours. And some people said he closed his eyes. Look, it got pretty boring. In all fairness, I love these people. But there's a lot of people. It was a little bit on the boring side. But I didn't sleep. I just closed them because I wanted to get the hell out of here. Some of them, I didn't sleep, by the way. I don't sleep much, let me tell you. But, it's funny. Some of them got me in a blink. When you go like, and they took me as at the closed segment of my cycle. And they said he's sleeping. And besides that, Marco, between these two guys, if I was sleeping, they'd be waking me up very fast. They'd be knocking me. Come on, you got to wake up, boss. But no, we've had great meetings. Look, we're the most transparent presidency by far, and I love going around the room. But we're going to pick a few people. I think I would like to ask Steve if he could just give us a brief description of how well we're doing in the Middle East, because we have peace in the Middle East now. There's a couple of little minor flames that we put out very easily. And very importantly, we got our last hostage back, which is incredible. Unfortunately, this was something that nobody said could be done. And I will tell you, Hamas was a big factor in getting all of the hostages back. They had we were not happy with them, and they had to bring them back. And they found the dead hostages, the bodies of hostages. And those parents wanted their sons back. I think in all cases, sons. But they wanted their sons and their family. They wanted their sons back as much as the people that had living hostages, that we got them back too. So we got the 20, but remember, we got hundreds back previous to that. But I always said getting those last 20 back is going to be very tough. And we got them back, and we got all of the bodies back also, which to those parents was just as important as getting back the son that was living. Steve, could you give us a little description, please?
Well, your policy of peace through strength, that's what delivered them home. Without that pressure, it never happens. We are in the second phase now. We've stood up for the first time, Mr. President, on your behalf, a technocratic, all Arab government. We've got the terrorists out of there, and they're going to demilitarize. They will, because they have no choice. So we expect that. Pardon me?
And now we want to get Hamas no guns, right?
Right. They're going to give it up. They're going to give up the AK-47s.
A lot of people said they'll never disarm. Looks like they're going to disarm. And they did help us with those bodies, getting them back.
And that family is so grateful to you. They called. I spoke to them. Jared spoke to them. You know, it's an amazing story. He broke his shoulder, but he went out there because he didn't want his friends to fight alone. He would be alive today but for that. He had no reason to go out with a broken shoulder, and he went out and fought them courageously.
And died.
And died.
That's right. This is a great story, and the parents are great. They were the only ones who didn't, they came back pretty rapidly, actually, considering. And we had get some back initially with the initial group. After that, we had to get a lot. That's a tough job. That's a nasty job, too. Who would want that one? That's a nasty job. Between Israel and Hamas working together, if you can believe it, they got them back. And we got the last one back yesterday, and the parents are so happy. It's amazing, actually, how
we sent a message to the parents on your behalf, as you suggested, and they were so grateful.
I guess grateful to me is a much better word, because it's hard to be happy, but they were actually. I mean, they couldn't believe that they had their baby boy. The mother said, my baby boy back. It's a very terrible thing. Steve, Russia, Ukraine, we're making a lot of progress. Could you explain that?
The Ukrainians actually said that we've made more progress since Geneva than they've seen in the last 4 years of that conflict. So we had 5 Russian generals last Sunday in Abu Dhabi with Jared I and Dan Driscoll, and we think we made a lot of progress. The talks will continue in about a week, but lots of good things happening between the counterparties discussing the land deal.
They're talking together.
We have a security protocol agreement that's largely finished, a prosperity agreement that's largely finished, and I think the people of Ukraine are now hopeful and expectant that we're going to deliver a peace deal sometime soon.
And because of the cold, extreme cold, they have the same that we do. I personally asked President Putin not to fire on Kiev and the cities and towns for a week during this. It's extraordinary. It's not just like cold, it's extraordinary cold, record-setting cold. Over there too, they're having the same. It's a big pile of bad weather, the worst. But it was, they said they've never experienced cold like that. And I personally asked President Putin not to fire into Kiev and the various towns for a week. And he agreed to do that. And I have to tell you, it was very nice. A lot of people said, don't waste the coal, you're not going to get that. And he did it, and we're very happy that they did it.
That's correct.
Because on top of everything else, that's not what they need, is missiles coming into their towns and cities. So I just thought I should say it. I thought it was a very, very good thing. And Ukraine was almost they didn't believe it, but they were very happy about it because they are struggling badly.
I think it shows, Mr. President, how you provide an overarching sort of presence in these negotiations. The Ukrainians never thought it could happen. The Russians are doing things maybe that people wouldn't give them the credit for doing, and I think it always comes down to your indomitable spirit.
Well, it was a good thing. You know, if you think it's cold over here, they say in Ukraine you can add another 20% to it. It was very cold place anyway, but this was, they see numbers that were so, they've never seen numbers like that, cold numbers like that. So it was, I thought I should mention it. Could I ask Scott Bessent, we have so many things happening, could I ask you to maybe say a few words, please?
Yes, sir. So the one big beautiful bill that was passed on July 4th last year, we're starting to see the effects kick in. You mentioned the great economy. One of the things in the one big beautiful bill, Mr. President, it was an honor to host you, and as you said, the best rapper in the world, Nicki Minaj, at yesterday's Trump Accounts Summit. We've now had 1 million people sign up for Trump accounts just this week. We think there'll be 25 million families who are eligible. The segment that you and she did has 1 billion hits. 1 billion hits on the internet. So we're telling everyone, go fill out form 4547, trumpaccount.gov. So thanks to you, the Trump accounts, and Next Generation's America will benefit from today's record-breaking economy, record-breaking markets. Sir, when we came in, the Biden administration had destroyed the American people with the 3 I's: immigration, inflation, and interest rates. Immigration, check, you close the border. The inflation, as we've heard, back down to target. Prices are coming down. And interest rates, we hope there's more on the way. We've got gains in wages, low prices, and I think 2026 is going to be the year for the Trump boom. It's going to be a supply side boom. I enjoyed the trip out to Iowa. In the diner, the staff there was thanking you for the no tax on tips, and they're expecting big refunds. From that, we saw the CEO of John Deere who said, thanks to your tariffs, new plants in Indiana and North Carolina coming.
2 massive plants being built by John Deere. And he's the chairman and CEO, wonderful guy. And I said he was at the event we had in Iowa, which is appropriate, John Deere, Iowa. But I said to him, so what are you doing? He said, we just announced 2 massive plants. In fact, they're going to have 1 plant for excavators. And he said, there hasn't been an excavator built in this country in 50 years or something. He said they're taking it out of Japan and they're moving it into the United States. They're 2 very big plants. And I said, so why are you doing it? He said, because of you and because of tariffs. I said, if we didn't have tariffs, would you be doing it? He said, absolutely not. So it's very important, and I hope we're going to be successful with the Supreme Court case because we're waiting, and we're taking in hundreds of billions of dollars. And we don't want to give it back, number one. And number two, and you know, the people that are fighting us on that case, by the way, are China-centric. These are people that are for China, but they're also outside of the United States. These are countries that have ripped us off for years and years, charging us tariffs. And now we're doing an amazing job, and we're getting it back. We're getting it all back and then some. And they're the ones that are leading that lawsuit that we have in front of the United States Supreme Court. So it's a very important lawsuit for our country, and hopefully it's going to work out. We're waiting a long time, but hopefully it's going to work out. We've taken in hundreds of billions, even trillions of dollars, and certainly we've taken in trillions of dollars of, you know, a big part of that $18 trillion that's coming in is because of tariffs. They're coming in, they're building because they don't want to pay the tariff, and the tariffs are very, you know, steep. They could be much steeper. You probably saw I put out a truth today, and the tariffs could be much steeper. We've been actually very nice about it. But even being nice about it, we've taken in hundreds of billions of dollars, and honestly, they've given us tremendous national security. The power that we have because of that, they have given us tremendous strength and national security. Go ahead, Scott.
Yes, sir. And the The IEPA power you used on the tariffs, as you said, we're bringing in tens of trillions of investments. The tens of trillions of investments turns into factories construction, which turns into factory jobs, which turns into consumer spending. You've right-sized the government, so government employment is down, private sector is up. Growth was a stunning 4.7, 4.8% in the past 2 quarters, biggest back-to-back gains in a decade. And we are doing that with government finances improving. So that will bring down the borrowing costs. The calendar year budget for 2024, 7% deficit to GDP, highest when we weren't at war, not in a recession, all the way down to 5.4% and getting better. Biggest decline since 2014. Generational gains in productivity, soaring productivity. We're going to lift workers' pay, record high prices, record high profits, and stock prices are soaring. You got a manufacturing renaissance, and all the key inflation metrics are trending lower. Over the past 3 months, the consumer price index is just 2.1, and core prices are even lower at 1.6. And I think that could trend below 1, given energy, as you talked about, the pharmaceutical discounts, and rents. So we're expecting a great year in 2026, Mr. President.
And we're going to be announcing next week, I think sometime, Scott and Howard and everybody, we're going to be announcing the head of the Fed, who that will be. And it'll be a person that will, I think, do a good job. We're paying far too much interest in the Fed. The Fed rate's too high, unacceptably high. We should have the lowest, and I think you read my statement today. I put out a statement before the meeting, but we should have the lowest interest rate anywhere in the world, because a lot of these countries are successful only because of us, because we allow them to have surpluses. And without surpluses, some of the countries that you most respect financially, that you say, oh, this one, that one, this one, that one, they're successful because we allow them to have surpluses. And we could easily stop that with the powers that we have, but we don't. We took some of it. But we took really just a small portion of it compared to what we could take if we wanted to. We should have the lowest interest rate anywhere in the world. They should be 2 points and even 3 points lower. And if it was, each point is the equivalent of if you call it just a paper test, you look at some jobs, or it's just like so easy to do. A guy that looks at these guys because most smart things not a question. But that. We have the numbers that's how the other thing that we are accepted for. Well, we walked the door. No one thought 2 cents. See, that's America. It's 30 trillion, 6%. That gets jobs. That's how you get money fast.
Of a partial government. As the president did not mention Minneapolis, ICE enforcement, Tom Homan's news conference this morning, whereabouts Vino. But we do, as I mentioned, have Secretary Noem at the desk. Get around the table to her. We'll be back for conversation. We're going to have the list for you in a moment from Mike Warning on Capitol. What's already occurred today, just in the hour. But we do want to start with Straight Pellet World Headquarters in New York.
Now, I just want to pass on an additional headline from what we heard about President Trump's motive. Next week's paper face. Now, giving losses of 25. Kingdom down 48.47. Nasdaq Mod Index on 300%. And Sword Index Big Tech down 3%. 4.2. We saw 190. That's group and a half. Stock will be mention the names are earnings outperformed. That's a is a Bloomberg business.
I definitely will be back in about 20 minutes on the basis of that. A lot of people will be now and here's the market.
And there are things that Democrats want that the administration can agree with them about, then let's do that.
This is border security. This is not longer on a set of common sense and necessary policy goals. We rein in ICE and end violence.
Schumer speaking for John, knowing that he's in for Trump, and this is for the action from the White House. Let's take them out of the equation and bring it out here in our Washington bureau. You shutdowns come just through the morning. The illness emerged in the public.
Ultimately, yeah. The president and cabinet very close to our witness and our customer forces and President remarks something like getting closer. For the time being, they're getting close to it with which Democrats say every two this year. Now, every week that will pay. That's
the one that bills all tax, right? What's the argument they see? How with
the party in the House of Republicans, and if he comes down as, hey, I want this, I'll get the Democrats will vote for that. For the other 5 bills.
Well, this is an interesting moment for Democrats after forcing the last shutdown and really not getting a lot for it. they put there on the front burner. But Mike, there's still no deal on Obamacare subsidies. Some thought that we'd be talking about that by now. Is that what would come?
The
or is that
Democrats
issue dead?
will likely figure out a way to keep pounding away
Yeah.
on that. It doesn't look like they're getting closer to a deal. Some Republican senators were involved with trying to get a deal with some moderate Democrats. It doesn't look like they've actually reached a deal so far, and it's getting further and further away from open enrollment in Obamacare. But I would bet that Democrats are going to try to find a way to keep talking about this and pounding away at it.
Interesting. There's no chance Mike Johnson brings the House back to avoid a shutdown this weekend.
I think it's possible, but not likely. I mean, I don't think they. One sort of this gets into the nitty gritty stuff, but the White House Budget Office can kind of delay a shutdown for a little bit if they want, and before the shutdown process. And also, like, when the government shuts down over the weekend, it's kind of like the tree falling in the forest with nobody around. It doesn't really have a big impact unless you were going to be called for National Guard duty that weekend.
Got it.
So there's ways of like making this either no shutdown or so not disruptive that it doesn't really affect people who are listening to this show mostly.
There you go, Mike. Thank you for bringing it home for you. Mike Dorning with us here in Washington. Capital Influence. Find him on the terminal and online, and we'll let you know if we get more action between now and the end of the program on Capitol Hill. We're going to discuss it as well with Gregory Meeks, the congressman from New York, Democrat, ranking member on the House Foreign.
%38 revenue gain. That's good. That was better than the market thought. But they're increasing capital expenditure 66%. And so there's this mismatch at the moment, which Amy Hood, the CFO, tried to get the nuance of it across to the investor base, saying, look, we're actually deploying a lot of compute for ourselves to make our own AI better, to make our own software better. But as you're seeing the rest of software get hammered today, people are worried that really the software investments aren't going to pay out that much in terms of long-term growth, in terms of revenue generation, because there are so many more upstarts. Anthropic has got so good at co-work, for example. Is that a competitive threat? How good is Copilot really getting? Look, ServiceNow, it beat. It saw extraordinary growth in excess of 20% of its revenue. It's getting hammered today on its shares as well, because people have still got this underlying anxiety that a lot of these older school business models cannot hang on in the age of competitive threats and the unwinding of some of these B2B software that we've been so used to and so ingrained in our everyday.
Wow, this is really wild. And we haven't even mentioned Meta, which is through the roof, but not enough on an index level to compete with the losses that we're talking about. Are we then to believe, am I getting this right, that not only are we picking winners and losers, but we're going to be so good at vibe coding in about 5 or 10 minutes, we're not going to need Windows anymore? Or, I mean, really, is that where we're going here? We're not going to need cyber from CrowdStrike or Palo because we're all going to have Anthropic and make our own software?
That's such a good point. And we had a great analyst from Goldman on today, Gabriella, who was telling us that, look, you might not be using Microsoft's consumer apps right now. And you might be all in on Gemini and ChatGPT and Anthropic's Claude. But longer term, if you're really working in a business environment, you need that safety level. And really, that is why the Foundry offering that Microsoft gives you is a one-stop shop that will continue to be baked into enterprise software going forward. That's why, even though no one can really articulate what Salesforce does, Salesforce still remains so ingrained among its customers. Look, ServiceNow is actually increasing at such a rapid clip, the amount of business new wins that they're having. But at the moment, we're just worried that software will be eaten by generative AI upstarts. And I think there's just not enough of a beat, not enough of organic growth. Many saying, look, a lot of this is inorganic, but think of ServiceNow that's done a lot of M&A, for example, worrying that that's how these companies are growing. But really, Goldman were like, this is a buy the moment. They have a buy rating on Microsoft. They think that longer term, they will only benefit from the investment that they're making in their own Copilot, their own AI offerings from a consumer perspective, from a B2B perspective, and that really this anxiety is misplaced.
At some point, somebody's going to look really smart here. Obviously, ServiceNow is down 11%.
Yeah.
So we fast forward to Apple.
Mm-hmm.
We're going to see the other side of this coin tonight because apparently all I keep hearing, Copilot's a failure, nobody ChatGPT, all this stuff. We need better. So Apple shows up tonight, hasn't spent much money on AI, and is rewarded for it?
Maybe, in terms of its hardware.
Okay.
Look, what we're thinking is it's going to have done really well in the Christmas period. In the holiday period, in particular, they're actually managing to claw back market share over in China. That's important. But as Mark Gurman will tell you, and he's our scoop du jour every single day on Apple, he's saying, if you take a bird's eye perspective here is a company that is behind on AI. It's behind in terms of hardware innovation. Just think, everyone else has got a foldable phone. Where's Apple's? It's behind in terms of AI hardware as well and wearables. What is it doing? And really, that's where they're going to have the bang for the buck. Everyone's seen that they've had to sort of throw in the towel on Apple Intelligence of its own and go to Google, cap in hand, pay them yet more money to be able to use their underlying technology. So how are they going to prove out that they are so successful, but they're not having an innovator's dilemma moment where they're so successful they've taken their eye off the prize? I think what's also going to be interesting for them is the memory side of the equation. How much are they having to give away in terms of margin in the next quarter looking forward? Because memory chips, bog standard, boring analog chips, have become really, really expensive because all the Samsung and the like are all making AI chips instead.
Right. No, this whole Micron, Seagate, Western Digital thing is crazy. I don't know if this is a blow-off top. Actually, I see Micron is lower now after these ridiculous gains. I don't know. I don't want to talk about shutdowns anymore. I just want to hang out with Caroline and talk about AI and tech. Can we do that, James, from now on? We need good news down here, Caroline. Maybe you can come help us out with it. Never miss Bloomberg Tech. B-Tech, as the cool kids call it. Caroline Hyde and Ed Ludlow. Every day here, 11 a.m. Eastern Time. Bloomberg TV. I'm Joe Matthew in Washington. We'll keep tabs on the markets. We'll get up to date with Charlie Pellet in just about 5 minutes. Stay right here. Our panel's on the way next, only on Bloomberg.
12:40 on Wall Street. We do check markets all day long here on Bloomberg. I'm Charlie Pellet. President Trump says he will be announcing his nominee to chair the Federal Reserve next week. He also reiterated his expectation that the central bank's new leader will be lowering interest rates. Right now, we're looking at lower stocks. The Dow, the S&P, NASDAQ, all in the red. S&P down 44. Right now at 69.33. That is a drop of 0.6%. Dow Industrials have been fluctuating. Last update, I told you the Dow was higher. Right now, lower, down 40. Drop there of 0.1%. Techs hit hard. NASDAQ down 1.4%. The NASDAQ 100 index down 1.1%. And the Bloomberg Mag 7 index down 0.8%. Yesterday, we heard from 3 of the Mag 7. Tomorrow, we will be hearing from Apple. The 10-year, actually Apple today, after the close of trading, we've got the 10-year 4.23%, the 2-year 3.54%, spot gold down $55 the ounce. Keep in mind, did hit 5,500, down now by 1%, and silver down 1.2%. Did see a 119 print on silver. Right now, we've got silver at 115.34. Bitcoin down 5.1%, 84,770 right now on Bitcoin. A day after the Fed meeting, Claudia Sahm, chief economist at New Century Advisors, told us she is not surprised that Fed Chair Jay Powell declined to answer questions not relating to monetary policy, choosing to wait instead until he goes before Congress.
Powell even gave a hint to it in very Fed speak where he said, Congress is the window to democratic accountability for the Fed. That's where the Fed goes and has to answer those tough questions. So we're going to hear more on that. It's just trying to get, the timing right and the forum right. Yesterday was really for him to speak for the committee on these deliberations, and I think he did a good job on that. But, the politics are there, and they're going to have to address this more fully.
Claudia Sahm of New Century Advisors, interviewed on surveillance. And again, you heard the president right here on Balance of Power saying he will announce his nominee to chair the Federal Reserve next week. Again, the S&P trading lower by 46 points, down 0.7%. Apple, after the close of trading today, Apple up now by 0.3%. We did hear from MasterCard this morning. Shares higher, up 2.6%. Visa will also report after the close of trading. Visa right now up by 1.1%. That, Joe Matthew, is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. Joe Matthew in Washington here on Balance of Power on Bloomberg Radio, satellite radio, channel 121, and we're always streaming live on YouTube. Search Bloomberg Business News Live to meet us here in the studio. If you're just joining us, we've seen the vote come and go. It has failed. This is the funding package that was at one time going to help us avert a government shutdown. If you rewind to this time last week, it was done, right? Everybody said, yeah, there's no shutdown this time, Joe. Stop asking. But of course, everything changed in Minneapolis. And as Democrats demand changes to the Department of Homeland Security funding bill, well, this was never going to fly. The procedural vote failed. And I'll let you know, this was not just Democrats. About a half dozen Republicans also voted against this piece of legislation, including Mike Lee. Rand Paul may not be such a surprise, but Tommy Tuberville and others. So now they're going to get back to the table. Here is the story that they're going to hammer out a deal between Democrats, Chuck Schumer, and the White House, Donald Trump, to come up with a compromise bill that would put restrictions on ICE. So people are not being shot in the street. Different mode of doing business, different training, body cameras, and so forth. We've been talking about this, and a lot of it hinges on what took place in just the last 24 hours in Minneapolis. Remember, Gregory Bovino was sent back to California, and Tom Holman was sent to Minneapolis. He's been there for a couple of days. He's met with Mayor Fry, he's met with Governor Walz, and he held a news conference this morning to talk to reporters about his attempts to lower the temperature. Here's what he said.
So if we get these agreements in place, that means less agents on the street. More agents in the jail means less agents in the street. This is common sense cooperation that allows us to draw down on the number of people we have here. Yes, I said it. Draw down the number of people here. We will conduct targeted enforcement operations. Targeted, strategic enforcement operations.
Brings us to the headline on the terminal. ICE set to dial back Minnesota presence after Maine pullback. One of the other states that has seen the presence of ICE. Dial down. The word from Tom Homan as we assembled our panel. Republican strategist Maura Gillespie is with us today, the founder of Blue Stack Strategies and Democratic strategist Archie Siddiqui, former senior aide to Speaker Pelosi, founder CEO of Bellwether Government Affairs. It's great to see both of you. Welcome. In fact, both of you worked for former speakers. Maura spent quite a bit of time working in John Boehner's office, so we've got a good sense here in this panel of what might happen next on Capitol Hill. And Archie, I'll start with you as our Democratic strategist, because Democrats seem to be in the pole position here. Is Chuck Schumer going to be able to have the leverage to make a deal with Donald Trump?
I think it's unfortunate what got us here, right?
Yeah.
The deaths of 2 U.S. citizens. So I think there's some much needed reforms. They're common sense, as you mentioned. We're talking about body cams. We're talking about the right to make sure that ICE agents can't barge into your house without a warrant. These are very common sense positions, which I think hopefully now we're in a position where Schumer can negotiate this with the president.
Do you worry about hearing people call, and Democrats, progressives, call for defunding or abolishing ICE, because this is being seen as the same plane as defund the police a couple of years ago?
I think Democrats have really focused on in terms of really addressing what is in front of them, and that's why I go back to kind of common sense, basic protections.
Yep.
So I think so far that is the case. I think there is a part, a contingent of Democrats who gravitate towards that, but I think most Democrats realize that ICE serves a important function.
Yeah.
But more importantly, I think these protections will help ICE become more efficient and have a better community partnership.
We should note that as we keep eyes and ears on this cabinet meeting at the White House, it's now been going on for over an hour. This story has not been mentioned. The funding standoff has, and the president said that he might have a deal with Democrats, but ICE has not been mentioned. Immigration enforcement, not mentioned. Minneapolis, not mentioned. Kristi Noem is at the table, sitting directly across from Donald Trump right now. If he calls on her, we'll bring it back in the room. But it's just an interesting bit of optics here as we have this conversation, Maura. There are reports now ICE agents are being ordered only to target immigrants with criminal charges or convictions. Is that the beginning of the reform in a public-facing way, the PR battle that ICE is going to be waging, as Archie suggests?
Well, absolutely. That's what the American people voted for. By and large, most Americans support ICE going after those who have committed heinous crimes and who are here undocumented, and to hold them accountable, to bring justice to those victims. And that's what we want to see for our law enforcement. What we've been seeing is Kristi Noem and Stephen Miller and Corey Lewandowski more or less creating an operation to fill quotas and to hit a certain number and creating an atmosphere of terror and fear. And that's not what people voted for. They voted for safety, and people have not felt safe given what these ICE raids have been doing with untrained individuals who have been given a gun and given authority that has been superseded essentially by ego. And so what I think Tom Homan's presence today in his press conference was to set a new tone and to say that the operation continues in a much more targeted and responsible manner. And that's the hope that I think Republicans will have to go back to their districts and tell constituents that's the focus. That's what the administration is shifting gears to do. Will they take accountability for what has happened? I'm not sure, but we'll see what Kristi Noem has to say for herself today, because right now it is a nightmare for inside the White House and inside that cabinet.
Yeah. Well, we'll see if she's allowed to speak, of course, but she still is on the job, and the president said that he does support her when he was most recently asked, said she's doing a great job running the agency. Cece has a great question, Archie. Wasn't this what they were supposed to be doing the whole time? There was a question for Tom Homan in that news conference. Very simple question. How did we get here? How did we get to the point where this was allowed, where you have untargeted ICE raids, where people are just knocking on doors and pulling people out of cars and so forth? Is that what people voted for, and is that legal?
Well, I think that's the interesting aspect, because going back to Maura's point, is that this, the election was very focused on the border. Mm-hmm. And then you look, I think the Democrats I've been talking to have really focused, that's why they focused on Noem, because it felt like, and we've seen this, is that ICE agents felt like there was no accountability. They could do whatever they want without any sort of accountability. And that creates an environment where, these are tough situations where if you don't have the right training, these are split-second decisions. Yeah. And that's why I go back to that. All of these reforms are good for ICE as well.
Mm-hmm. Well, interesting to consider this, because, Maura, there are going to be investigations, certainly if Congress changes hands. What are these hearings going to look like if it's a Democratic-led House next year?
It'll be very interesting to see what Noam has to say for herself. You've already seen some of the inner squabblings coming out to light, saying that her verbiage and her reactions were directed by Stephen Miller and purportedly from President Trump himself. And so it'll be interesting to see, who's telling the truth there, who's shifting blame where, and what the president has to say in response to that. Because you're right, he did say that he stands by Kristi Noem and says what a great job she is doing. It'll be interesting, though, when these questions start to come out, who was in charge and who was directing these orders. Because, I think for an organization, an administration that has largely condemned the previous administration, calling it a auto pen presidency. Well, then what do we have right now? Is it a shadow presidency run by Stephen Miller? I think that's a big question that Democrats and Republicans alike are going to be asking. Who's in charge and who's making these decisions? Because clearly something went horribly wrong in giving orders to an entire group of people who are undertrained to have such authority and really behaving in ways that are, in a lot of manners, reckless and endangering U.S. citizens, but also communities across the country, but here, especially in Minneapolis.
Well, it's a really interesting point, Maura. The flow chart here is a bit confounding. As Secretary Noem says, I was following the direction of Stephen Miller, and the president, Donald Trump in this case, when it comes to the rhetoric that we heard. Miller was the one who called Preddy an assassin within hours of his death. And Kristi Noem was the one who talked about him. Yeah, go ahead, Maura. Go ahead.
And I'd also point out that the vice president reshared or retweeted, whatever we're calling it these days, what Stephen Miller said, calling him an assassin. And I don't think enough attention has been paid to that because, again, I do think that the president was appalled by what happened on Saturday and has clearly decided that he needs to get a hold of what's going on and put Tom Homan in charge to try and course correct. But very little has been paid attention to J.D. Vance's role, and I do think that there needs to be some accountability for Republicans to feel confident in going forward for these next few years. But you're seeing that reflected in what's going on in the Senate right now with not wanting to fund DHS because of this situation. And so I do think there needs to be a little bit of a conversation in-house right now.
Well, as Noem points to Miller points to Customs and Border Protection. He said, hey, this is just what we heard in the initial assessment from what happened on the ground. Of course, none of that was confirmed. So who is running this operation becomes the question.
I mean, Joe, we've talked a lot about in the past the difference between Trump 1.0 and 2.0.
Yeah.
And the folks on the Hill that I've talked to is that, Stephen Miller came back. He came back stronger and with much more influence. And so everybody I'm talking on the Hill do think that all roads lead to him. And then obviously Noam has a role as well. Yeah. But in terms of policy and setting that direction, and he doubled down for a long time. He did not course correct for quite some time, as you know.
Yeah, so the question now becomes what happens on Capitol Hill. This is actually a pretty cool blast from the past here. We have Boehner, Pelosi in the same panel. This is great. Let's take a minute. Maura, are we going to shut down for a couple days, have a deal by the beginning of next week? What do you expect?
I do think that they'll be able to get to a deal for Monday. And technically the Congress, the shutdown can be decided. So if they have a promise the House will return Monday to vote on something, that's an option where, because the shutdown would happen over a weekend, there is a way to kind of stretch it out a little bit. I do think that they could, you're seeing senators who, again, the vote just happened where Republicans also joined in voting down the procedural because there's an opportunity here to separate DHS. And I think there are a lot of Republicans who would be okay with that right now because of the fact that there is concerns about what's happening and so many questions. It doesn't give them the confidence to vote for something until there are changes made. And so I do think that they're listening to constituents and that it's promising because that's who they serve at the end of the day. They don't necessarily need to be serving just the president or, in this case, Stephen Miller. They serve their constituents, and that's who they need to be listening to.
What do you think, Archie, of the reporting that we're seeing? Strip DHS, make that a CR, pass the rest, and then there's another bill waiting next week for when the House returns.
I mean, that's a no-brainer, and I think that's been a no-brainer from the beginning. I think it was a little bit of a false narrative that there was no way to decouple these bills. So I think that's the right way to go, and it was easy to do. I think it took a while for Republicans to get to the point where because they just wanted to pass it. And going back to the first shutdown, the other important point I would make is these bills are much more bipartisan because of that shutdown. You look at, that's why there has been bipartisan support for them.
Yeah, wow. Fascinating read on things from two voices of experience, Maura Gillespie, Archie Siddiqui. We thank you so much, and they'll be back in our second hour, of course, with more to talk about following our conversation with Congressman Gregory Meeks of New York. He still hasn't called on her yet? Pete Hegseth's talking now. Kristi Noem, an hour and 15 minutes almost, sitting silently across the table in the cabinet room from Donald Trump, has not said one word. You better believe that reporters are ready with questions. If we get there, we'll bring you into the room for it. Only here on Balance of Power.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
No deal yet to avoid a shutdown. Welcome to the Thursday edition as a package of spending bills, including Homeland Security, fails today in the U.S. Senate. This just happened thanks to Democratic demands for new restrictions on ICE, but there were Republican no votes as well. there may be a compromise in the works. We've got eyes on the White House, and we'll discuss with Bloomberg's Tyler Kendall, who has the latest for us, with insights ahead from Congressman Gregory Meeks of New York, the top Democrat on the House Foreign Affairs Committee. And as the president's border czar tries to lower the temperature in Minneapolis, we'll have details and analysis from our political panel. It's all after a look at Wall Street. Having some trouble today following some earnings reports, beginning with Microsoft. Charlie Pellet has the latest from World Headquarters in New York. Lows of the session here, Charlie?
Indeed, just about. Right now we've got Microsoft shares moving lower, down by 11.9%. The Dow, the S&P, NASDAQ, all in the red. Right now we're looking at a 64-point drop in the S&P. Not the low, but still down 0.9%, 69.14 where we stand right now on the S&P 500. Dow down 190, decline there of 0.4%, while the NASDAQ Composite Index down 381 points on NASDAQ, down 1.6%. Tough day for tech after earnings last night. NASDAQ 100 index down 1.4%. The Russell 2000 index down 0.6%. And the Bloomberg Mag 7 index now down by 1%. Last night we heard from 3 of those Mag 7 names. 10-year 4.22% with a 2-year 3.54%. Gold, wild ride there, was above $5,500 the ounce. Right now down 1.3%. Spot gold down $71 the ounce. Silver just about at $115 now, lower today by 1.5%. We are seeing a surge in crude. West Texas Intermediate up 3.7%, 65.55 the barrel. Brent closing in on $71. Brent, of course, the global benchmark, up now by 3.7%. Couple of headlines to pass along to you. Trump regulators say they are ready to lay out crypto rules. That's according to the Wall Street Journal. And you heard President Trump live last hour on Bloomberg television and radio. President Trump saying he will have an announcement on a Fed chair next week. S&P again down 67, drop there of 1%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Charlie, thank you so much. Of course, we're going to have a lot more to talk about when it comes to markets in the late edition of Balance of Power with Apple earnings and more coming after the bell. So we've got a close eye on Wall Street, and Charlie will be back with more in just about 20 minutes' time on the Thursday trade, now that we are in the throes of reporting season. Thanks for being with us on the Thursday edition. They just wrapped the cabinet meeting at the White House. 1 hour and 20 minutes. Not the 2 hour plus or even the 3 hour plus romp that we've seen in meetings past. There were some differences, beginning with no questions. Press pool was brought in. We heard from a number of cabinet officials, with one big exception, but no questions were taken by the president or any of the other officials in the room. Tyler Kendall, Bloomberg Washington correspondent, joins us now ahead of our conversation with Congressman Gregory Meeks, who's going to be with us in just a moment here with a lot to talk about. A potential government shutdown on the menu for tomorrow and big questions about the future of Homeland Security funding. Tyler's with us in our Washington bureau. An hour and 20 minutes, no questions, also no Noam.
Yeah.
Kristi Noem was never called on.
Right. That seems to be pretty shocking, or maybe not shocking at all, considering she seems to be the cabinet member who has been most in the news recently after we saw this recent reshuffling on the ground in Minneapolis. We saw the border czar sent in, Tom Homan, replacing the chief of border patrol, Bovino. And even though that's not directly Kristi Noem, instead, what was sort of the underlying here is that Homan is going to report to Trump, not to the DHS secretary. So it appears to have been pulling her back after what happened in Minnesota. Still, the president has maintained that he has full confidence in her. He's been asked directly whether or not she's going to leave her post, even as we've heard what's been an increased outcry on Capitol Hill, including some Senate Republicans like Tom Tillis, Lisa Murkowski, saying that she ultimately should vacate that position. But as of now, he's standing firm. But perhaps that was by design. I think that probably would have been one of the questions if reporters had been afforded that opportunity.
Yeah, well, that's for sure. And I'm sure they would have asked about the potential for a shutdown tomorrow as well. The president did say, though, that nobody wants a shutdown and he's working with Democrats. That was about all we got there. As we look at the guidance today from the White House, there's one big event at the end of the day, Tyler, and that's the premiere of the Melania documentary. This is going to take place, I believe, at what we used to call the Kennedy Center. The president, first lady, but the guest list is remarkable. Beyond those who were in the cabinet room, Jordan Belfort, the Wolf of Wall Street, reportedly Eric Adams will be there, Gianna Infantino's got to be there. Dr. Phil. Who else do we expect?
I also saw the rapper Waka Flocka Flame is going to be there as well. We know that this is something that the president has been looking forward to. He's talking about it a lot. He himself is going to appear at the Kennedy Center as they try to promote this movie and perhaps Melania's position in the administration, as we haven't heard as much from her perhaps this year, but she has taken on some initiatives. Of course, we know her Be Best campaign when it comes to cyberbullying and also her efforts when it comes to the Russian-Ukraine war and helping those Ukrainian children that were taken from her home. So it'll be interesting to see what her comments are focused on ahead of this release of this movie.
I guess the after parties are going to be quite the story tomorrow. With the latest on Waka Flocka Flame, that is Tyler Kendall, Bloomberg Washington correspondent, because, well, it's 2026. I'm Joe Matthew in Washington, and thank you for being with us here on Balance of Power Thursday edition. As we count down to what will probably be a partial shutdown, but maybe not a very long one. There's a deal reportedly in the works between Chuck Schumer and Donald Trump that would help to avoid this from being longer than a couple of days. If DHS is stripped out of the 6-bill package, put in place a CR, and follow up next week when the House comes back with a new bill that would put restrictions on ICE, beginning with body cameras and new training. That's at least where we are now. That may not come to fruition, but the president seemed pretty optimistic about it, and reports would suggest the same. Gregory Meeks, the congressman from New York, joins us right now, the top Democrat on the House Foreign Affairs Committee, who is in the throes of this debate right now with a unique perspective as the top Democrat on foreign affairs. Congressman, welcome. It's great to have you back on Bloomberg TV and radio. Did I just describe a likely scenario? When you come back next week with your colleagues, will you have a new bill to vote on for DHS?
Well, I surely hope so. I think nobody really wants to shut down, but we cannot continue with the bill that was sent over to the Senate from the House. So I hope that the Senate Republicans and the president works with Senator Schumer so that we have a new bill. Well, number one, that the DHS funding is out of the other 6 bills, of which we had basically some bipartisan agreements, so that we can make sure that there are changes in the DH bill. What you said is right. We want to end roving patrols and have some enforced and accountability. We want to make sure that there's an increased transparency. We get rid of no judicial warrants, no mask. You know, you can't wear masks. So I think that if that kind of dialogue and conversation is taking place, and I hope that Senator Thune works with Senator Schumer.
think long term.
Is based upon the economy and what it believes is the appropriate way to move. So I would hope, I mean, the president is free to choose whoever he wants to be on the board. But you know, the kinds of acts, you know, I would hope that we don't have someone who just wants to rubber stamp whatever the president says and does for political purposes. One of the things that has been most important by the Fed is their independence, so that they can make a decision based upon the economic totality of which they have to deal with. And so that is what sustained us and why others would have invested in the United States, because of that kind of sustainability and independence. And I would hope that the president will continue, or the Fed will continue in that manner.
Mm-hmm. Well, I know that that's important to you as a member of the Financial Services Committee, and as long as Tom Tillis is stopping things down in the Senate, this could be a longer conversation, Congressman. It's great to see you, and thank you for joining us, as always, on Bloomberg. That's Gregory Meeks, Democrat from New York's 5th and ranking member on the House Foreign Affairs Committee. We'll assemble our panel next for their take on all of this as we count down to what likely will be another short and partial shutdown at the end of the day tomorrow. This is Bloomberg.
Okay, let's see. You bitch. 2:00. Yeah, I can't wait till no fucking 2:00, man. I'm in the zone, B.
passing out the water behind the computer. So I was looking to see an empty glass. Both empty. Okay.
I found it.
I'm glad you found those vehicles. Now we need to go put them. Where do we put them?
You were right, motherfucker.
honest with you, 8 years.
Did you ever eat?
A ghost pepper itself.
Ghost pepper?
A ghost pepper by itself.
Look, man, I got the one chip for you. You think you can handle it?
I know I can.
They telling me this chip ain't nothing.
It's mid at best.
Why you finish Presbyterian? How you feel right now?
I don't know. I don't like the taste though.
You like the taste?
Don't like the taste, but still not hot. Not feeling anything.
So you telling me right now you don't feel nothing?
I don't feel
At all?
at all.
What's your 10?
No.
Like from scale 1 to 10, like what number?
2.
Why you look like you about to cry type of deal? Why you out of the water?
Well, you see I'm still fine, ain't I?
Don't look like you fine, I ain't gonna lie. How did you ever eat?
A ghost pepper itself.
Ghost pepper?
A ghost pepper by itself.
Look, man, I got the one chip for you. You think you can handle it?
I know I can.
They telling me this chip ain't nothing.
It's mid at best.
That boy waits no time. Why you finish Presbyterian? How you feel right now?
I don't know. I don't like the taste though.
You like the taste?
Don't like the taste, but still not hot. Not feeling anything.
So you telling me right now you don't feel nothing?
I don't feel
At all?
at all.
What's your 10?
Nothing.
Like from scale 1 to 10, like what number?
2.
Why you look like you about to cry type of deal? Why you out of the water?
Well, you see I'm still fine, ain't I?
Don't look like you fine, I ain't gonna lie. How did you ever eat?
A ghost pepper itself.
Ghost pepper?
A ghost pepper by itself.
Look, man, I got the one chip for you. You think you can handle it?
I know I can.
They telling me this chip ain't nothing.
It's mid at best.
That boy waits no time. Why you finish Presbyterian? How you feel right now?
I don't know. I don't like the taste though.
You like the taste?
Don't like the taste, but still not hot. Not feeling anything.
So you telling me right now you don't feel nothing?
I don't feel
At all? At all? What's your 10?
nothing.
Like from scale 1 to 10, like what number?
2.
Why you look like you about to cry type of deal? Why you out of the water?
Well, you see I'm still fine, ain't I?
Don't look like you fine, I ain't gonna lie. How did you ever eat?
A ghost pepper itself.
Ghost pepper?
A ghost pepper by itself.
Look, man, I got the one chip for you. You think you can handle it?
I know I can.
They telling me this chip ain't nothing.
It's mid at best.
That boy waits no time. Why you finish Presbyterian? How you feel right now?
I don't know. I don't like the taste though.
You like the taste?
Don't like the taste, but still not hot. Not feeling anything.
So you telling me right now you don't feel nothing?
I don't feel
At all?
at all.
What's your 10?
Nothing.
Like from scale 1 to 10, like what number?
2.
Why you look like you about to cry type of deal? Why you out of the water?
Well, you see I'm still fine, ain't I?
Don't look like you fine, I ain't gonna lie. How did you ever eat?
A ghost pepper itself.
Ghost pepper?
A ghost pepper.
Could you imagine you starting a business and then 1 month rating? You get addicted to it.
It breaks beliefs. It's like what just happened.
You get addicted to that feeling. Yeah. So now, your ideology is I need to work harder. And so this whole chase the bag culture started. And I'm like, no, I'd rather build a bank than chase the bag. You gotta take the bags to the bank. And so I just, like you say, you start to learn how to work less but make more money. And I think that is really hard for people because of how we've been conditioned to work hard. And it goes against everything that we've been taught. Join my free masterclass. Oh! So now here's my boy, what's your name? I'm Tom, bro. This is Tom. I'm in Dallas. So Tom comes up to me, running hard. Hey, God, can't believe I saw you. I want to run with you. Come on, man, let's go. So he's like, else. I thought you ran faster than this. Watch that motherfucker